take this opportunity, first of all, to thank UNITAR for inviting us to participate in this important event, and also to learn from global experiences. So it was really very insightful for us. I've been following the previous presentations, so we are happy to be part of this discussion. So as maybe requested, I unfortunately, due to the time, I had to prepare my presentation, so I don't have a presentation, but I tried to discuss and introduce, talk about the challenges we are facing here in Africa, or in sub-Saharan Africa, in terms of digitalization of financial sector. But before maybe I come to that, I want maybe to talk where we are coming from, which is very important. I think a decade back, in 2007, I think it started in Kenya with M-Pesa, I think, which is known, where we saw new payment service providers joining the market to try to maybe fill the gaps that were at that time, because banks, the banking industry could not really serve the market, and through the mobile money operators, we saw really a big shift in terms of digital payment and the financial inclusion in general. And what was amazing, really, the technology which the leverage on was really very basic, a very basic communication infrastructure using feature phones and the USSD. But it had really a big shift in terms of financial access. Maybe to give some of the examples, I will focus maybe on in our country, but the trend should be the same in the country. We saw, for example, that the formal access to finance moved from 42% in 2012 to 77% in 2020, and this is due to contribution of mobile payment. Which started, as I said, with mobile money operators, but later also the banking industry also joined it to also rationalize their operating costs through banking agency. And maybe as opposed to what people think, that maybe there is that competition between mobile money operators and maybe the banking industry, but what we are seeing today, that there is that synergy when they work together. For example, we are seeing that the money collected through mobile money contributes to the total deposits, because the money is kept in the bank. So it's also improve somehow financial intermediation of the banks. So that's also something very important to note. So when we look at where we are in terms of payment access point, we are seeing now that mobile-based point of sale, for example, has surpassed traditional point of sales, which are based on card. And we are seeing now that, for example, the number of point of sales we have today, they are of mobile payment point of sale are 10 times the traditional when compared to the traditional point of sale, which is another shift we are seeing. And in terms of usage, we are also seeing when we compare, for example, we are coming from in the last 5 years. If I compare, for example, the value of the retail digital payment transaction to GDP in 2016, we are only at 21%, and now in 2020 we're at 79%. So you can see that shift. We have also to note that maybe 2020 has been really a big shift because of the crisis we are in with the COVID-19 pandemic. So the digital payment really served a tool to fight against the spread of the virus during this period, and we saw really the transaction even quadrupled during the lockdown, even after. So that's very very important to note in terms of development and the contribution of I can say mobile payment, especially to the access to finance in our countries. When we look at all these achievements are a result of, first of all, of different initiatives that have been put in place, and one of them is really the regulatory framework that has been adopted by various countries in terms of ensuring that the new product at least is offered with the maximum consumer protection framework, which is very important, but also a regulatory framework that supports innovation. My colleague from Singapore was talking about the sandbox regime they have adopted, and I appreciate where Singapore is now. But I wanted just to highlight that we have also to recognize that Kenya experience really of M-Pesa, we all followed, by the way, after that, is a very successful learning experience of a sandbox regulatory framework, because how the Central Bank of Kenya really handled the innovation in terms of allowing mobile money operators to come into the system, the ecosystem was very important. So we have also to recognize that and we think we should continue in that context. So maybe the question which was asked here is to say now, what kind of challenges now do we have? So we recognize that despite the remarkable development we are seeing in this domain, there are still challenges that hinder on how we can access, we can improve in terms of cashless journey, and also contribute to financial inclusion. And some of the challenges, some are on supply side and others are on the demand side. So if I can just enumerate some of them, we are seeing, yes, different service providers offering various products, especially in the payment system, but the lack of interoperability, both at the domestic and the cross-border level, is still really a challenge that is hindering how we can bring synergy and make sure that at least we increase the adoption. Remember that when we are talking about payment, this is a volume-based business, and without that integration and having segmented product, we may not achieve the mass usage of the services. That's something we are seeing. Second is also on when we look at the level of smart penetration of smartphone in our countries. I think it's still limited. As I said before, the current payment services are offered through the USSD technology. And if we want to move to another level, maybe we need also to increase the number of smartphone to allow more services to be offered through the services. When you look at the region and in Rwanda, you see that the penetration is around 20%. As opposed to other countries, we are seeing also that the fintech industry is still very young. And most of them are, and even the fintech companies we have, they are concentrating most on in the payment industry, leaving other financial sector like lending and insurance, maybe without really very big support to maybe to contribute to a proper financial inclusion. So that's something we are seeing. The cost of our services also are still very high when you compare to the purchasing power of the population. And this can be witnessed at the domestic and cross-border, especially on the cross-border, really the transaction cost is very high. Even if we are saying that mobile money operators contributed to this, you find that maybe most of the transactions are still cash-based. It's about cashing at the agent, you transfer money, and on the other side, there is a cash out. So that's something we are also seeing that we are still at that level. And another challenge we are seeing is about limited competition. You find that market is still monopolistic. When you look at, for example, here in Rwanda, you may find, for example, that MTN Rwanda is dominating the market. In Kenya, you see that it is M-Pesa, and I think it should be the same in other countries. So that's another challenge we are seeing in this domain. On the demand side, again, when you look at our populations, you see that the level of adoption is limited because of also lack of or limited digital financial literacy, which is still an issue. The cash-based culture, which is also another challenge we are seeing. Passive risk, which is also I can say, linked to the level of digital literacy. So people are still perceiving risk when using the systems. But also, we have also to make sure that to note that we still have a high level of informal economy, and especially when we talk about serving the population at the bottom of the pyramid. So, so that's when we look where we are now. You may find that at least we are that transition phase between really pure cash based economy to a digital economy. So we are seeing a shift of maybe different fintech companies, including mobile money operators, trying to bring more products that are totally digital. For example, for merchant payment, as opposed to relying on agent-based transaction, which are, as I said, which are still cash-based. So that's what we are seeing. So now, what are we doing now, at least to overcome those challenges and try to reduce the share of cash transaction in the country? As we said. First of all, it's to make sure that we continue to have a regulatory framework that adapts to the market. So looking at the risks that are there, but also supporting the innovations coming into the market. We are all working on the interoperability between different players in the market, especially linking banks, MNOs. And also, it's also important to note that in our countries, we still have a microfinance industry, which is very vibrant. So they must also participate in the national digital platform, which is very important. So various measures have been taking place in terms of protecting consumer to ensure that at least we have that healthy digital usage of the services. We are also looking at how we can also incentivize the players to ensure that at least we reduce the cost of the services, which is also very important. We talked about, my colleague talked about the sandbox. I think sandbox is still very important, but also providing advisory services through innovation hubs. As I said, we have what you've seen maybe in our countries, you find that we have a pool of talented ICT experts from different various schools, but which may not, who may not necessarily understand the business and understand the challenge you have on the other side. So providing that advisory services to understand the regulatory framework, but also understanding the business, the governance model is very important for the success of fintech in the industry. On the sandbox, I think we've learned what is happening in other countries, especially Singapore and the other countries, but so we are trying to see how we can have really a sandbox approach that can fit into our context, because when we talk about the fintech industry, you'll find that the side of fintech industry in Singapore and here in Rwanda, they are totally different. So even the regulator approach should be adapted to the context of every market. So even the sandbox approach is also very important in that context. So and another thing we thought, and this brings to the question on the digital currencies and even private cryptocurrencies, we are also exploiting the role the central bank should be playing in the innovation. We know our central banks have played a really big role in establishing a solid and a robust interbank payment infrastructure. But now we are asking ourselves, should we maybe continue the same technology? So what can we do, maybe improving that interbank infrastructure? How can we work with the private sector, maybe complement with the private sector to ensure that at least we can shift where we are and go to the next level of the innovation, and also the cash less level of our economy. So that's something we are looking at, but making sure that at least we're not disrupting, because we are not considering that the central banks, they want to disrupt the market. We should be there to complement at least what the private sector is already doing. And by analyzing such kind of initiative, we also to make sure that we also look at all the other impact of such initiative on financial stability. We know that theoretically it says that any central bank digital currency may also have an impact on the bank, on the role of intermediation of the banking sector. So it's something we have to look at. Ensure at least that we understand whatever technology we can choose to adopt, for example, what will be its role in terms of operating costs, in terms of impact on financial inclusion. So this is something we are looking at, because any technology you may adopt, you have also to make sure that at least it's available for every citizen, to ensure that it contributed to the inclusion, as I said. And when we look, for example, at how the infrastructure is today, as I said before, in terms of penetration of smartphones, so this can be, for example, a challenge. We are also looking at how, and this is a discussion around the world on how private crypto can also be regulated. So it's something also we are exploring, and we are envisaging to have a kind of phasing approach where we can start with those crypto assets that may be adapted to the current regulatory framework. For example, if we are talking about any digital asset that is similar to e-money issuance, it's easy to adopt that. Or if it is a security, it's easy to adopt that. But looking at other unregulated cryptocurrencies or crypto assets in general is something we are looking at, and ensure that at least also we have a proper regulatory framework for that. So this is what we are doing, Judith, in terms of initiatives to overcome the challenges I've already cited. And we are happy to have a discussion with the forum. Thank you very much.